All right, welcome back, Chart Addicts, the Expert Trader Podcast. We have Ken. All right, guys, Ken Archek is in the house. He's back again. If you guys watched episode 1, I know you're excited for this. First episode, we talked a lot about who Ken is as a person, who Ken is as a trader, and what motivates him. This time around, we're going to talk a little bit more into the trading side. You know, what's Ken's perspective on the markets? How does Ken view the different markets that he's watching? And what's his perspective on a day-by-day basis while he's observing these markets? Ken, welcome back to the Expert Trader Podcast.
Hey, it's a pleasure. It's a pleasure, man.
It's really good to have you back, Ken. Can you walk us through a little bit about your current mentality when it comes to the markets? How are you seeing the markets that you're trading? I know you're a big indice guy. So how are you watching those markets and how are you watching those unfold?
I'm watching it like a hawk. I realize usually I would be swing trading on the indices, but knowing how market conditions are, you'd rather want to just get into a market, play it out, secure your profits. I don't even think it's even beneficial for any kind of swing traders to be trading in these market conditions. So it's more people are transitioning to becoming more day traders and getting your capital, getting your ROI. So I have been watching it, paying attention to the news, seeing how news reacts first and then reacting due to the technical side. So because again, we could have the fundamental news release and it comes out negative, but then it's going in the complete opposite direction, just giving us indication that it wasn't ready for an opportunity as soon as news dropped. So,
well, that's really good how you're using the news to kind of wait and be patient watching that first phase.
Yeah, it's been wild. I've seen it multiple times and it's just like, wow, like this really happened, so it's been surprising.
So you said something that you're doing now is that you're not really swinging the positions. So in the past, is that what you were doing? Swinging indices?
I would like to learn, swing on indices when market conditions was just completely fine. That's when I was using my bigger account. But like now it's just like, all right, let me just focus on, becoming more, as a day trader, just securing the profits, because I'm also giving out trade ideas as well too. So people could also secure profits with me as well. As a trader, you got to learn to adjust when market conditions is not like in our favor. So as traders, we always got to adjust to what markets are, changing to. So like, if it's moving very volatile, like how it is now, you got to, look at it from a different angle. Becoming more of a day trader or becoming a scalper, at least you're getting your targets hit. That's all it really comes down to.
So if you're talking about adaptability and switching your strategy, how are you using technicals versus fundamentals today in order to help you gauge these indices or in order to help you gauge the markets that you're trading in?
It's been more technicals than ever. As I've been telling a lot of students, I have been aware of the fundamentals. I do pay attention to it, but I'm not listening to it because I just know that it's just been a lot of here's this with the information, here's that with the information, and then technicals is always going to be king. It's always going to tell you what price is doing, where it's reacting to, so then you could actually capitalize on the moves. Beginning to know is that you got to be more patient for the moves instead of just diving in, especially when fundamental news just kicks in and it could just completely take your account.
Do you have a certain framework that you use for how you translate fundamentals into market activity? Like, do you say if Trump tweets at 3 a.m, then the stock market's most likely going to boost this way? And do you have a framework that you work through for how you translate fundamentals, or is it just like a case-by-case basis?
I do, especially when Trump's talking. I remember I think it was like 2 weeks ago when he was talking about, I think it was like reopening like the economy. And I believe it was like 3 p.m. PST time. And I was on my way going to the barbershop. I told everyone, I'm like, look, when Trump speaks, everything is going to go up, and everything spiked up to the upside with the indices. And I was just like, oh my God, like it just went so high. And I'm like, man, so if you hear anything that is positive from him, it's just like, it becomes like such a rally. But if you hear anything that's negative, then, you already know where the direction is coming down to. So
sure. Now the markets really do follow what Trump says.
Yeah.
It's just like kind of see him as like the ringleader for the economy right now.
Yeah.
So if he's optimistic, markets are optimistic. If he's pessimistic, they're pessimistic.
Yep, that's right.
All right. So you talked a lot about, right before the call started, about not holding positions for that long because they're not favorable for swing traders. Why isn't it favorable to be a swing trader today?
For like the major pairs, like a lot of like the USD pairs, I would say, if you're trading a lot of like, the non-major pairs, like pairs that move very slow, then that's beneficial, especially the most perfect time to swing on those positions. Because, It's just gonna follow, following within structure. But especially with pairs that that's most frequently traded, I wouldn't suggest swing trading those because you're just gonna have a lot of rejections, major rejections, volatility. So it's good to you just capitalize on you can still get good big moves. Just know that you don't want to swing for at least like 1 or 2 or 3 weeks on those positions because every week we having different news that's just being impacted on those pairs.
100%. Yeah, the way the markets have been moving back and forth is crazy. Boris Johnson got sick, and I saw that GBP crashed.
Yeah, it's just one news, just like it's like becoming like the new stock market now. Like if someone has a scandal in a company, oh yeah, we're shorting everything now. Like it's been really interesting, just observing and watching how market conditions been like. So,
okay. Now let's talk a little bit more about trading strategy. So when the week is starting, Ken, how do you really look at the markets? Like, let's say it's a Sunday.
Yeah.
And what's Ken's mindset on a Sunday, looking ahead at the week in front of him? What is your perspective?
Yeah, so I like to look at majority of all of the pairs. I feel like they're going to be moving within the week. So I do like set weekly overview calls. And sometimes if, I'll mix it up and add in a few pairs that I am focusing on. And then I do a whole complete breakdown, whole analysis, straight to the T. And if it follows it, great. And then we could follow, resume back on Tuesday because I don't even like to even trade on Monday. So allow the market to have some breathing room and space. And then Tuesday to Friday, and that's when I become a short.
Okay. All right. So let's say it's a Tuesday now.
Yeah.
What time does Ken wake up? And how is Ken looking at the market before it opens up just to kind of prime yourself mentally to prepare you? Or do you do any of that? You just wake up and look at the charts and...
Yeah, honestly, I don't sleep. Like, even though if I'm in my bed, like, I'll be looking at my phone and, looking at setups. And then if I really want to get more into detail, I would just come in and hop on my computer, and then I would just be on it looking, for more confirmations on trade setups. And then from London to New York, which that's what I'm always up. So like, I don't like missing the big moves because then if I catch the big moves, I just want to be done. I'm good. I'm satisfied. Don't want to be greedy. And then I keep it moving.
So does that mean you're sleeping for the rest of the day? Like, are you sleeping at the end of New York into Tokyo?
Yeah. I'm sleeping. I'm taking power naps. Try to like it's hard sometimes because sometimes I'm just wired or even thinking about creative ideas and stuff like that. Or I would just hop on a computer and let me just put that time since I can't even sleep. So and just keep that grind continuously.
Oh man. Okay. That's powerful. I mean, at least we know now where the success came from. A whole lot of energizer in there.
Yeah.
Right, so let's talk about, we're moving a little bit away from scheduling and more into like, let's say journaling stuff towards actual strategy.
Yes.
Do you have a specific technique for journaling? Like, do you look at trade by trade or just overall which things are making you the most money, long side, short side? Do you look at specific metrics for yourself, or is it just more generalized? Is my strategy working or not?
I really, I focus on the pairs that, I journal from like the entries, take profit, stop loss, seeing how many pips I'm catching consistently on. And then seeing if that is appealing to like my lifestyle. Am I satisfied with what I'm catching, So and then if I like what I'm catching, I just stick to it. People know that I do trade heavily on the indices, but like if I am want to like trade in more of UJ more aggressively, then yeah, I could do that. So I'm always open-minded. I'm just the type of trader I am is if I see an opportunity, I'm gonna strike it. So I love trading everything. So, and it's just a beautiful thing. So if I could just have it all set in stone, then I'm always going to be attacking the pairs consistently. Okay.
So you're saying that you're watching different pairs. Do you have one central strategy that you apply to different pairs? Or is
yeah. My strategy applies to every pair. So, and that's the most beautiful thing. So the execution behind it, it's phenomenal. And it's straight simple. So I'm just waiting for confirmations, either 4 confirmations that I'm looking for, and then it's the execution button.
Now, some people talk about having a winning strategy being they either have a winning percentage, like they win more than they lose, or like they're just net profitable because their strategy is like 1 to 3 or 1 to 4.
Yeah.
Have to win 5. Is your strategy one or the other, or is it a combination of both, or how do you?
I don't even focus on the net. Like the net is fine because that's not going to give you the overall picture. Yeah, you could make a lot of money and still have major L's, and that's fine. But I focus on the percentage, like getting the consistency, that is gonna appeal to anyone. That's what people are going to look at. Like the money is going to be there. It's already there. But if you have the consistency rate behind it, it's just like, wow, this person has an 89% win rate. Like that's crazy. That's what people are going to look at, at the end of the day. You can make all the money you want and have, you could be break even, but that doesn't show no consistency. Like you're just becoming in a stagnant line.
Do you know personally any traders that are successful in the long term without proper risk management?
Oh man, without proper risk management, sheesh.
Yeah.
I really don't know, to be honest. All the traders that I know, they use, at some extent they use good risk management. But when you get more familiar with the charts and you know how everything moves, then you kind of could throw risk management out the way and then risk big. Like,
sure.
So.
Yeah, there are levels.
Yeah, they're just levels,
Yeah, a professional athlete's going to be able to pull off a different kind of move than somebody who's starting out.
Yeah, like
doing that risky shit in the game.
Yeah, like it's just like comparing yourself to a rookie. Who are you going to choose? A person that's an MVP, caliber player, or are you going to choose a rookie? Everyone's going to choose the MVP because he has a skill set. The skill set is always going to win. Even if you throw risk management out the way, because like you could lose that and then make it right back again. So.
Okay. All right. Ken, you're saying that you have a consistent strategy.
Yes.
So what do you still find yourself making any errors in the execution of that strategy? Now that the strategy is so perfect or as very close to the way that you want it, do you still find any performance errors? And if so, not even in yourself, but in your students as well?
Yeah, I do see it. It's just really allowing the market to come to you. Like I tell people, especially if you're looking at a downtrend market, this is what I tell all my students, it's like you don't want to be trading a falling knife, right? So we're seeing a moving trend going to the downside. You're obviously going to be looking for a retest for you to get a better short opportunity. So like a lot of our students, just sometimes they will like get in the middle of the movement that's already happening, and then you completely fuck yourself when it goes for the retest. So like, yeah, I've seen it multiple times. You could have had a better entry because you want to have that mentality. You want to always look for risk-free trades. As hard as that is, you want to have risk-free trades so you can set it and forget it, place your trailing stop, and then if it comes down and hits, guess what? You still win. That's still a great percentage that you're securing right there. So
now you talk a lot about the stop loss and break even. I know you talked about it the last podcast that we have.
Mm-hmm.
Do you have a strategy for if it gets hit for like re-entries and stuff like that, or do you just look at things on a trade by trade basis? Is it like if the stop gets hit, I'm going to re-enter for sure, or is it like, okay, if it's still respecting this trend, then I'm gonna go back to my original bias?
Yeah. So like even if it comes down and hits my my break even, so you could re-enter, but that's still not giving you the valid reason. So I'll tell like my students, allow the market to move up and then look for a re-entry within the trend. So then it becomes more confirming. You allow the market to go and come to you for that better execution. Then now you could ride up. So it just probably wasn't ready at that time for your first entry. So just wait, allow the market to do its thing, then react.
All right, Ken. So I'm going to move on to to this part where we were asking people online. We were asking people on Instagram to submit their questions, and we have a few frequently asked questions.
Yeah.
This one is about trading capital, which is, where do you feel like the shift came from in your trading capital, or where did your trading capital come from? Did you, some people are online talking about getting an investor. I know that's above a lot of traders' skill level. I know some people are talking about building things organically and compounding an account.
Mm-hmm.
Can you talk about yourself personally? Can you talk about to a new trader or to an experienced trader what they should go through if they're feeling like they don't have enough capital and things like that? Should they keep on it, or should they go get funding?
Honestly, I have no issues with getting funding, but the only issue that I have about is that you need to know how to trade. That's the most important thing, because at the end of the day, you're going to be throwing your money away for attempting to complete getting a funded account. So you need to learn, practice, take your time. Like I understand people don't want to risk their own money, and that's fine. That's completely understandable. At least practice. The market's not going anywhere. It's never gonna change. It's just gonna be probably even increasing how much everyone's gonna be participating in it. So then once you're ready, you could just now go for your funded account, pass the challenge, and guess what? You rewarded yourself after all the hard work that you put in. Like there's no shortcut. Like like people find like there's a shortcut, but no, you can't. You still got to put the same grind. Everyone went through it. You know, everyone had crazy amount of losses. You know, they became successful. Everyone. So when people come to us and they're like, "Oh man, I've been struggling," I'm like, "Guess what? We all have. Like, there's only one path when it comes to trading. It's either you go through it or you go through it, and that's it."
All right, this one's a little bit more of a personal question. This is just something that I wanted to ask. Do you remember that month or year when things shifted for you between when you were struggling with trading, I don't know too much about your financial background, but maybe just you were in a place where things just weren't working out for you, and then when things started to shift for you? Do you remember that time in your life when things like that happened?
Oh yeah, like so this was almost about 3 years ago. I was on a very, very, very good winning streak, and I was feeling confident than ever. And then it was just the whole month of July was just horrible. You know, I was, trading, everything was hitting my stops. Like, it was just like, damn, like, I've never experienced anything like this. So like, and I was also giving out trade ideas as well too. And it just felt like, damn, like I suck. You know, I came to that point that like, people weren't even like, not even going to take my trades. People are actually counter trending my trade ideas and doing the complete opposite. So a mental hit for me to accept that like I had a shitty month, and then I had to, I had to be real with myself that look, like this is okay. Like, this is fine. Like it's only 1 month out of a whole year. So are you going to allow 1 month to disturb your goal on being good, being the best, like, within yourself? Because I'm only competing within myself. I'm not even trying to be the best. And I did that. And then slowly but surely, I gradually was just saying, all right, you know what? Let me just focus on one pair, this and that gradually. Let me see how from month to month my progression. And then from there, it was just like, what I realized that it was a mindset thing. Like I was so focusing on the losses and how I had a horrible month. And I had to realize that I had to have a short-term memory. So I got to erase that and have a fresh new break, do other things, take my mind off it, and then recollect myself.
Wow. What would you say the biggest difference are? The biggest differences are between your mentality now and your mentality back then? What would you say makes that difference? What is that?
Yeah, it's a huge difference. Huge difference. I know just my mentality, I would have been just very emotional, like, not being a savage on a chart, doubting myself, not having confidence. Now, like, I don't have those issues. Like, I'm a complete savage. I have that Kobe mentality, no emotions. If I'm in major drawdown, I'm smiling. If I take huge losses, I'm still smiling, So, like, I'm grateful for the opportunity of the skill set that even if I do take major losses, I can make it right back because I've dedicated my craft to this, right? So my old self will be thanking me now to where I'm currently at now, just because like I have sharpened my mindset and able to handle being very, very emotional, like, and controlling that, So all that came into play. I know I had to go through it, and it was just, at the end of the day, it was just personal development on my end, just to keep being better.
Ken, did you ever have this phase? Because I know a lot of traders have this phase. Did you ever have the phase where you wanted to be more right than you wanted to make money? Like you really wanted your strategy to work out more than you were focused on the actual profits coming in, or did you never have that phase?
Yeah, it's so appealing to be like, damn man, I was right. Like every single time I could look at a chart, I'm right. So and it's just like, and then you have that reality, you can't be right because the market is going to teach you. It's going to educate you. Like, so like, yeah, I've always had that feeling. Even when I first started, I was just like, yeah, man, I'm going to look at GJ. It's going to go up just to how I planned. And it did the complete opposite. So like, yeah, we all have that phase that we went through. And we're just like, yeah, this is what it's going to do. But not focusing on what price is actually doing. We're just having that mental aspect and painting that picture that what we wanted to do.
When you say the market's going to teach you, what does that mean? Are you talking about how it's unpredictable, or can you elaborate on that?
Oh no, like for example, like if you're getting in a bad entry, right? And you're dealing with, good amount of drawdown that you're not even familiar with. So it is going to teach you that, you want to be patient. You rather want to wait for the best move, not just getting into a move, right? So allowing the market just to play itself, then have a better execution than just diving right in. And it's going to teach you, like, then you're going to be like, oh, I'm not going to make this same move again. Like, I'm going to just let it chill, let it do its thing first, then I'm going to react.
Okay. How do you have a way of kind of phrasing, I don't know how I would ask this, phrasing your mindset about trading? What is your rationale about the reasoning behind trading? Like, are you trying to just very simply, personally, I would say that my strategy is I like to buy things when they're low, sell things when they're high, continue trends and reverse trends, etc. Is there like a way that you would frame your trading style? I know we touched up a little bit about this on the first podcast, but you talk about your intraday strategy. Do you have a way of framing your style?
Yeah.
Looking at the markets.
Yeah, I'm definitely a trend trader. I love trading with the trend. Yes, I could trade as being a counter trend trader as well too, but with me, I love cleanness to a chart. Like, I don't know, it's just like so appealing to allowing the market to move and then getting a nice sniper entry. Like, it's a beautiful feeling, knowing that you're rewarding yourself after letting the market do its thing, so you can get a better entry. And if it comes down to does the exact same thing, you're just looking for the same move, and then looking for a better clean entry and then execution. So I'm definitely trend trader. Like, I love trading with the trend, and honestly, it's how you could really capitalize on making a lot of money as well.
Okay. All right. So I have a few more questions. Well, this part of the call was really supposed to be more technical. We're supposed to dive a little deeper into trading itself. But I'm really more interested about some of the backstory stuff. So I'm gonna wrap up this part right now and get back to some of the backstory. But let's talk about risk management versus trade management. So the way I see it is, risk management is, you're limiting your downside. Trade management is you're managing your upside. Do you have an upside and downside strategy? And if so, are they similar? Like, do you take partials on the upside and do you scale down on the downside? Or do you just take partials, break even, let it ride, and then stop loss you manage?
Oh, no. So this is a technique that I like to do. So within a trend, so if I focus on, for example, I'm using a $10 lot size and I'm catching it right at the bottom of the trend. So I'll allow it to go at least like 40, 50 pips up. And then I partial close in closing half of it and still remaining of that entry, my initial entry point. So now I'm building equity. So now what I'm going to be doing is just waiting for it to have a rejection to create a new high low. And then I'll place a nice big risk, like, big lot. So I'm building equity within the trend and securing half of it every time it's pushing up. So, and that is how I build my account very, very fast. So just even with a small account. So and then I capitalize on it. So then when I'm there, it creates a whole new high. Then I'm doing the exact same thing coming back to the downside.
Just playing with house money.
Yeah. Just playing with house money. So I'm making money by still having the trends in my positions, but then once it gets up, I can just close all my positions and then I build up a great amount of equity. So if it pushes up for, at least like 300 pips, and that's a W in my book.
Okay. Awesome. Do you have a risk maximum for the week? Like a risk limit or a maximum loss limit or something like that? Or do you have a maximum gain limit for the week? Like, if I hit this, I'm out, I'm good. I'm satisfied.
Not really. Like, honestly, I wouldn't say like I'm greedy, but it's just like when I see like great moves, and I usually always try to aim for at least 10,000 pips for the week. Like, but sometimes when I see, moves that's just there, I'm going to execute. I'm a shark, so I just look at it that, the markets is going to be making money regardless if I'm trading or not. So I got to get my piece of the cake.
Okay. All right. That's really good. So let's work back into some of this history stuff, because the reason I like to ask about the nostalgia is because a lot of people are kind of where I'm trying to take them back to in your memory lane, and they're there right now. And maybe they're really at this point, like, they really can't see how this can get better. They really can't imagine how this can progress. I kind of want to give them some perspective about, like, listen, a lot of people have been there. You can move past it. So talk to us about a time where this might have been an era of your trading where you were struggling with your trading.
Yeah.
And you eventually started to get a grip on it, and you saw some kind of hope in trading, and it kind of pulled you through it, and you
Mhm.
started to get those gains. I know we
Yeah.
talked a little bit about it earlier on this call too, but
Yeah.
we just touch on that.
Um, yeah, it's just like how I started, and just watching, you reflect yourself from when you first start, like that journey of just like, oh man, I'm doing it, I'm doing it, I'm doing it, and then you're applying to everything that you're being taught, being patient, starting to be back testing, figuring out what works that that you could actually duplicate, because that's what I mainly focus on. Like if I'm looking at a chart, how could I make this duplicatable for the next person that wants to learn? So if I can't make it duplicatable, then it's not going to work for me at all. So like I had my ups and downs with it. So the more throughout the years, it just made more sense, and what I needed to fix and what I needed to adjust on. It's how my markup or breaking down a pair very clean. Is it simple? Is it confusing? So it was a lot of late nights, with a good amount of back testing and figuring out what works. How could I see things consistently so it could be better execution?
Okay. Well, it's a whole lot of self-reflection. It's a whole lot of experience. You
Yeah.
can't really beat the game, and
No,
trust the process, not rush the process.
you got to look at yourself in a mirror, and you're the only person that can make yourself better, especially when it comes to trading. So, it's you and the charts, and that's it.
All right. I'm interested to ask you this question. I know you might be biased because you have your own strategy. Is
Yeah.
there one size fits all strategy? Can all people trade the same strategy?
I don't know. I think it really comes down to if it fits for you, like if you are very confident that you like it, then great, but like everyone has their different ways or confirmations they want to look at it, or point of view. But it's all about like if it fits for you and you like it. It's just like how, like, if you fit into like a new pair of shoes, if you like it, you want it, then you're gonna stick with that, so like everyone has their own preference of, if they want to use many indicators, they want to be a naked trader, want to be an institutional trader. You find out what works for you, and it keeps it, because like the more simple it is, the better it's going to be for you.
So
So
100%. All right. So we have another 60 or 90 days in this quarantine before things really start opening up, before we're obligated to go back outside. Ken, what should people at home be doing with their time to make sure that they come out ahead and that they master this skill? What should they be focusing on in the 90 days?
90 days, it's a great time. Like everyone should be trading. Like honestly, this is great. I'm actually great this actually happened, because not only that you see the experienced traders just capitalizing on it and making crazy returns, I saw Q, do his thing, so but this is the best time in showing you that who are traders and who are not, so who are people are taking seriously about this skill set and who's not. So if you are, in the background, and if you guys are listening to this, you guys should be back testing, taking the time. You don't need to be forcing trades, every week. This is a great time to really test yourself as an individual, to sharpen your skill set. So then when everything's back to normal, you're going to be able to capitalize on the biggest rally that we're going to see. Like once everything goes back up to running, everything's going to shoot back up, and, if and you took this time to study, it's only icing on a cake. So, this is a great time for any new person to get involved, learn the skill set, take full advantage, because everything's digitalized now. Like nothing is going to be the same. Everything's going to be very, very, very different. If you're not utilizing everything that's online, I'm not even talking about even trading itself, but like, utilizing all the resources that we have out there. I tell people Google's free. The knowledge is there. Like, it's just for you to take the acknowledgement to actually go and put in that work and find out what works for you. So all I know is that when I saw trading, I was preparing myself for situations like this.
Wow.
And long term, I was just like, perfect. This is just a win. This is only gonna, I'm not gonna lose. I'm not gonna, apply for a job. Like, I'm applying to better my skill set throughout the years. So then when situations like this happens, you played it smart. You're the winner.
Wow, that's incredible, because I know a lot of people see some of the more experienced traders now and they're like, man, they mastered this skill and they did this and that. They don't realize how much time really took for you guys to get to the point where you can capitalize off of an economic downturn.
Yes.
So that's really powerful. All right, Ken, really appreciate you stopping by the podcast. I had one more thing. What is Ken's top 3 picks? What are you watching during this economic downturn that you can't wait for to capitalize on?
One, I'm waiting for everything to be over so we could catch this rally up. So, yeah, but I've been paying attention to a lot of gold. So gold has been really making the headlines, especially with Iran, showing their dominance of, taking all the Venezuela's gold. And oil as well too. So they're really trying to be a powerhouse right now. So that's really going to be interesting to see how everything plays out on that end. But overall, just focusing on the indices, focusing on all of the stuff that way, companies, with their earning calls, taking full advantage on the markets up and down. So, so honestly, those will be my picks, the indices, trading on the commodities and, waiting for the rally. So it's just about time. So, it's just patient for traders.
All right. You guys heard it. This is not financial advice. Hopefully this gives you guys an idea of what you guys should be focusing on and some missing links in your own trading system. Ken, thank you again for stopping by. If you guys want to connect with Ken on IG, Ken R Check, and he also has his podcast on YouTube, make sure you guys check him out. All the traders at home, make sure you guys go back and rewatch this if you have any questions. Ken, thank you for stopping by the Expert Trader Podcast.
Of course, it's a pleasure.